All right. Hello, everybody. Thanks for being here. I hope you're doing well. My name is Jeff Gibby. I'm going to go ahead and kick off uh, with a legal disclaimer, of course, right? So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. I want to invite you, if you have questions as we go through the today, let me know. Every time I kind of look in this direction, I'm actually kind of looking to see if you've asked a question or if there's something I can answer for you. I want to give you a little bit of just a brief history of me. I'm going to abbreviate it a little bit just because I generally tend to go on a rant. Started here at Metastock back in 1997. It's a great place to work. Absolutely love it here. When I started, I was in sales. So if you had questions a little bit about kind of how you could improve your trading or what the software could do to help you with your trading, I'd be the person you called. For the last 20 years or so, like it's been a minute, but for the last 20 years, I've kind of worked in our partner development. I do a lot of the events here, a lot of the kind of multi speakers that we do, as well as I've also worked with a lot of experts to help them kind of get their stuff into Metastock. And it's been a lot of fun too. I've learned a lot. So that's me. Of course, I do represent Metastock. You can almost see it on my thing, but it is a great software company. It's a great company to work for. Our average employee tenure is like 13 years. So I'm not going to kind of definitely not going to just kind of talk a little bit about, or I'm going to talk quite a bit about Metastock, but I want to teach you something today. And so I'm going to kind of get onto that. The one thing I want to there's a couple of things I'm really, really proud of over the years of working with Metastock. Uh, it's a company that started in the 1980s. It's been developing software, and it's consistently been rated number one this year. Oh, of course, I got to get something in my eye. This year marks the 32nd year in a row that it's been marked the best software in its price category, and that's an award that we win consistently. Sorry, my contact decided to do something weird. I might have to turn off the camera for a minute if I can't get this under control. Ugh. Okay, okay. Camera one check. Camera two check. Okay, we're okay. 32 years in a row, it's been rated number one in its price category by the readers of Stocks and Commodities magazine. And so, very, very proud of that. A lot of our customers have been with us for decades as well. And we actually have a great support staff that's right here in this office. If you ever have any questions, if you ever want to talk to them, they do a really, really good job. We actually keep more people in support than we keep in sales and marketing put together. So our software focuses on technical analysis and the ability to kind of test trading ideas, understand what works on the stocks that you're interested in, what might not work on the stocks that you're interested in. How to what we can help you really do is identify those methodologies and those stocks that kind of match those methodologies to understand what to trade, when to trade, how to trade it. So here's what I want to talk about today. If you have a stock you want to look at, type it in the chats. I don't like to come with a lot of pre-prepared perfect examples because that's not real world trading. What I want to do is kind of just have a chart. If you have a symbol you want to look at, we'll teach you we'll talk about it on there. So today what I do want to discuss is the importance of trading with a trading plan. Uh, as a vehicle to help you understand really kind of the mechanics of a trading plan, I'm going to teach you about MACD. So MACD was developed by Gerald Hell. He developed it in the 1980s. Very, very popular indicator. I'm going to kind of talk about how it's using. And then we're going to kind of talk about how to test it, how to understand how well it works, if it may be the best indicator or the least indicator, but worst indicator there. So again, if you have stocks, let me know. Type them in the messages here, and we'll look at your stocks. If not, I'll pull one out. It's not that big of a deal. So I do have a question for you though. And I want to know if you're familiar with MACD. So if you are familiar with MACD, go ahead and type yes in the comment. Otherwise, type no in the comment. And let's go ahead and get started, right? Another question. All right. This one I think is pretty interesting, and I'm throwing a lot of questions at you, but I do want to kind of get an answer from you. So they did a study. What is the best profession for trading? And so I put together some examples here. The first example I'm going to give you is a teacher or an educator. The second is an engineer or an architect. A psychologist or a psychiatrist would be C. An airline pilot would be D. Karen says A. Performer would be E. And maybe that should be also artist and musician, but we'll put that under F. What do you think is the best profession for actually learning before trading? So let me know what you think. And as you do that, Retina says D. I think this isn't necessarily a black and white thing. Over the years, we've worked with tons of experts. Somebody that comes to mind under the C category would be a good friend of mine, Jake Bernstein. He started his career as a clinical psychiatrist. Dr. Alexander Elder wrote one of the best, well, a couple of really good books on trading. Come Into My Trading Room and The Enhanced Trading Room. And there's quite a few other books, but those are the ones I've read. He's very, very prolific, very, very good technician. Actually, I think one of his books is probably the best that I've read. So I think there's an argument you could make for a psychologist or psychiatrist there. In terms of airline pilot, we do a bit of work with Chuck Hughes. He was an airline pilot, was actually a combat fighter pilot before he started trading options. Also, Greg Morris comes to mind. Greg Morris is retired now, but he wrote a very comprehensive book on candlesticks and their statistics, did a lot of research and studies on them. Ended up at the end of his career before he retired a few years ago, he was managing about $19 billion with Stadium Money Management, and he was a teacher. So we only got two guesses. We got an A, teacher, and a D, pilot. The actual answer is pilot. And I think that's interesting. And I think the reason is, if you kind of think about it, is they have a plan, right? When they're taking off, they actually kind of have a specific protocol that they follow every time, a consistent protocol. When they're landing, they have a consistent protocol that they follow every single time. Consistency, as I believe, discipline. It's kind of thinking about this. I just got kind of into the office, did a little bit of a walk to kind of clear my mind. And I was kind of thinking about how I'm getting a little bit better at playing the guitar, right? And I'm not great by any means, but I've been working on it for a little bit. I've gotten to a level where I can play some songs that I really like. And I think the reason that I've made progress in kind of that is I very, very consistently practice every day. So the answer is airline pilot, and I believe that the answer is because of consistency. I believe the answer is because of discipline. So let's talk a little bit more, and then we'll kind of drift into kind of talking a little bit about the MACD. I want to talk a little bit about this gentleman here, Richard Dennis. If you're not familiar with Richard Dennis, he is one of the original turtle traders. He was labeled the Prince of the Pit back in I believe it was the early 70s, late 70s and 80s. Very, very successful. Built it. I can't remember exactly what the numbers are. I might have them. Actually, yeah, okay, here we go. We'll cheat a little bit. He borrowed so $1,600 and reportedly made $350 million in about 6 years. He was a famous trader. It was back in the 1980s. He had a friend. This is Richard Dennis. The name of his friend was Bill Eckhart. Richard believed he could teach people how to trade. He believed it wasn't anything special that they were doing when they were buying. They were buying because of very specific rules. They were selling because of very specific rules. And he believed that it was something that you could teach anybody how to do. His partner, Bill Eckhart, another famous trader, believed that it was something you couldn't teach. He believed that it was something that you had to have kind of a little bit of a predisposition for. And so that's where the turtle traders kind of started. They put together some capital. They put some ads. They ran an ad in ads in Barron's, Investors Business Daily, a couple of other places. They ended up recruiting about, I think it was about 12 traders. Might have been about 15. Then again, that might be in my notes. But over the course of a couple weeks, they taught them kind of the methodologies, how to trade, how to kind of when to get into a position. If you're familiar with the turtles, they're basically trading a breakout methodology, how to get out, when to get out, and that kind of stuff. And what they ended up doing is kind of putting together a pool of traders and just basically teaching them how to trade. Oh, they weren't successful at it. They were extremely successful. And I do believe I still have the numbers in here. Let me look. Their aggregate profit over the course of about 5 years. There was 23 traders. I do remember this. Out of the 23 traders, 21 of them were male and 2 of them were female. They funded them with their own money. The aggregate profit they made was about 175 million in the course of about 5 years. So the saying, you've probably read it by now, is I always say you could publish rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. So let's kind of, so the reason I kind of go into a lot of detail on that is I believe that discipline is important. I believe when you're trading, it's important to be disciplined. I believe it's important that when you get into a position that you understand where that stop loss is going to be. Those aren't decisions you should be making on the fly, and that you should trade with a specific set of rules. I think a great way to kind of implement that in the trading that you do is through the use of technical analysis and technicals. Because as we're going to talk about as we get into this is everything I'm going to talk about when we start to talk about Gerald Appel and the way he looked at stocks is objective. It's not subjective. A pure technician will tell you that the study of technical analysis is the study of the charts. And they'll tell you that the shortcut to the fundamentals is looking at the technicals. One of the quotes that comes to mind, and I'm going to paraphrase this because I don't remember it exactly, but another great friend of mine, Steve Bigelow, used to always say, fundamentals don't matter in the market. What matters is the perception of fundamentals by traders. And that makes a lot of sense when you have earnings and they come in above, but the stock goes down. How are the fundamentals perceived by traders is more important than what the fundamentals are. So let's kind of dive into it. This is Gerald Appel. You've probably read that already too. He developed the MACD. It was over 40 years ago. A little bit of background on Gerald Appel. He wrote 17 books on trading. He published a newsletter called Systems of Forecasts that published uninterrupted for, well, maybe there was an interruption, I don't know, 46 years straight. And in addition, he published 5 books on photography. So let's kind of talk a little bit about MACD. What I'm going to do is I'm going to kind of dive into this is talking precisely about how MACD is calculated. I think it's helpful to understand what you're looking at when you look at MACD, and it helps you understand exactly what's going on. At its core, MACD is a trend and a momentum indicator. So that's what we're looking at when we're looking at the MACD. Some advantages of the MACD is as objective. So again, objectivity, I think, is important. Emotions aren't. It's easy to interpret it, and it helps people trade, helps traders trade in the direction of the overall trend. Okay. It can be prone to whipsaw, and it is a lagging indicator. And we'll talk a little bit about why it's a lagging indicator, but here's the shortcut to that. It's based on 3 moving averages. So of course it's going to be a lagging indicator. So let's go ahead and kind of talk a little bit. Did anybody give me a symbol? I don't see any symbols. So I'll make up one. Or if you have one real quick, now is the time. When Gerald Appel calculated the MACD, he didn't use whole numbers. He used 0.075 as an exponential moving average and 0.015. These don't line up with whole numbers, but the closest are 26 and 12. Okay, so the calculation for this is if I subtract a 26 period from a 12 exponential moving average, I'm going to get the MACD line. I'm going to go ahead and go back into Metastock right here, and we'll look at one of my favorite stocks this year. It's going to be Roblox. So we'll go ahead and just open that up. It's RBLX.K. And what I'm going to do is I'm just going to open up in a clean chart. Okay, so we'll go ahead and do that. Don't want any indicators on here just yet. We'll add them as we go. But I kind of want to go in here and play with this a little bit. Roblox has had a tremendous run. I think we got close to 123. It's pulling back a little bit. One of my best trades all year. I'm gonna change this up a little bit. I prefer candlesticks, so I'm gonna make you prefer candlesticks for the purpose of this demo too. Now, anything you ever want to change on Metastock, just double click on it and go to the properties. So I'm gonna double click on the bars. I'm gonna go ahead and set this to the default for this page. Then I'm gonna change it to candlesticks. Okay, we'll go ahead and click on apply. Not important, I visually understand candlesticks better because I'm used to looking at them. Okay, in candlesticks. Okay, now I'm going to apply those two moving averages. So right here we've got our indicator quick list. There's several hundred indicators that are part of the software. And one of the things that we just added with the latest version is I can actually type them in here and I can find exactly the indicator I want just by kind of doing, so I don't have to go through that huge list or modify it. I can just find what I want really, really quickly. I'm gonna go ahead and grab a moving average. I'm gonna drop it right here on the chart. Again, we tried to keep everything kind of similar to how it functions with your other Windows products, with your drag and drop, click and pick, just stuff like that. So it'd be kind of familiar and easy to use. One of the big things that we want to do is make things, we don't want you to have to figure out how to do stuff in the software. We want it to be intuitive. We want you to be able to focus on the trade. What I'm going to do here is I'm going to make this a 26 period exponential moving average. That would be the longer term moving average that would closely relate to the one Gerald used. Okay. I'm going to come in here. I'm going to make it blue. I'm going to make it a little bit fatter. I'm going to go ahead and click OK. I've got it on the chart. I'm going to repeat that process real quick. I'm going to drag it. I'm going to drop it. I'm going to go ahead and put a 12 period exponential moving average. And these are both placed on the close. Okay. That wasn't, I want to make that a little thicker. I want to be able to make sure you can see it. So I'm going to come back in here and just make it a little bit thicker. I'm also going to make it green. Okay. We'll go ahead and apply that. Okay, so there we go. We've got the shorter term moving average and the longer term moving average. And of course, I'm going to add the MACD with the histogram. So let's go ahead and do that. I'm going to type in MACD here. I'll add the MACD histogram level. Go ahead and put that on the chart. We'll go ahead and click on OK. And I am going to move this up here. I prefer it upstairs up here. So I'm just going to grab this, move it up. Oops. There we go. Put it up there. Close these up empty under Windows, and we'll talk a little bit about how it's calculated. So when we're calculating the MACD, what we're looking at is we're looking at the difference between a shorter term moving average and a longer term moving average. Okay, so a lot of the same mentalities that you're used to if you look at moving average basis systems are very, very similar. Okay. The MACD is actually calculated is this red line, which I'm going to make bigger right now so you can see it too. But if I wanted to figure out what this red line is, and I think I hit the wrong button. Let me go back in there real quick. I'm working on my ability to type and talk at the same time. If I want to tell you how this red line was calculated, I just subtract this 12 period exponential moving average from the 26 period moving average. The difference is going to be this red line. That's it. Okay, that's all. That's what the line is doing. Okay. I think if you understand that, you can understand exactly more of what you're looking at when you look at it. So for example, when Roblox is going up, and it's been going up kind of crazy up until today, but when it's going up, the difference between those, that shorter term and longer term moving average is going to increase. Okay. And as long as it's going to go up, the faster it goes up, the more that is going to increase. If we're in an area where we're kind of stagnated right here, the difference between the two moving average gets way closer together. And so you won't have big, huge peaks and troughs. That's why it looks at trend, but it also looks at momentum. You're comparing not only is it moving bullishly, but how fast is it moving average? How fast is it moving? Okay. If we have a down area, the same thing is in reverse. It's going to basically give us a decreasing MACD. Okay, so that's how the MACD line, this the major line, this line here, is calculated. Very, very simple. We're just looking at the difference between those two moving averages. So now, there's a couple more lines. I'm going to kind of talk a little bit about how they're used. This dotted blue line, which I'm going to make a little bit bigger right here, it's called a signal line. Gerald Appel called it a signal line because it's a signal that you could buy. When the MACD crosses up above its signal line, it's going to give you a buy signal. When it crosses down below its signal line, it's going to give you a sell signal. Okay. The MACD signal line is simply a 9-period exponential moving average of the MACD. That's all. Okay, so when you're looking at the MACD, you're looking at basically the difference between two moving averages and you're applying a moving average. It's a lagging indicator. Okay, I'm going to go ahead and make it a little bit bigger here. I'm going to apply that just so you can see it. And we can kind of reiterate what I said a little bit. But before I do, want to talk a little bit because I forget sometimes to talk about this histogram underneath. This histogram you can look at. It's just looking at the difference. Now, it wasn't initially developed by Gerald Appel. Who put together that? Let's see. It was developed by Thomas Asprey. I forgot. But it's just the difference between the signal line and the moving average. So when it crosses up above 0, you can kind of see where the buy and sell signals are. So you can look at the histogram, but all it is this the difference between this and this. Okay, that's all. All right, let's talk a little. That covers really how the MACD is calculated. Took me about 20 minutes to go through it, but it's pretty simple, really. I also kind of tend to go into a little bit of detail. Let's talk about kind of the 3 most popular ways that MACD is actually used. Okay, I alluded to the first one now. The first one is using the signal line. So with the signal line right here, when we cross up above the signal line, and we've been up above the signal line for quite some time on Roblox, when we cross up above the signal line, you're going to say that the MACD is bullish. Okay. When it comes down below the signal line, you're going to get bearish. So it was bearish for a little bit. It just got bullish again, right about here. Okay. I'm going to attach an expert advisor to this chart just to kind of illustrate what I'm trying to say a little bit better. But it's very, very simple. You can do this with or without the expert. The tool I'm about to apply, we call it an expert advisor. It can kind of identify bullish or bearish areas on the chart. It can help you understand indicators. There's several hundred in there. It can kind of point out different candlestick patterns. That's one of my favorites. Another class I do talks about the Ichimoku method. But for today, let's just go to the MACD. I'm going to go MACD. Okay, I'm going to do MACD by Metastack. I'm going to attach that to the chart. We're going to go ahead and close this out. And you'll notice I said that when it's trading above its signal line that it's bullish. You can see right here that it's labeling that area of the chart. I'm going to move right here. It's labeling that area of the chart bullish. When it crosses down below, it's labeling that as bearish. When it crosses up above it, it's labeling it as bullish. Okay. Again, the only thing that we're looking at when we look at those buy and sell signals is where is MACD in relationship to its signal line. Okay. That's it. Again, it's very, very objective. It's not subjective. We're not making a lot of guesses. And since it's objective, we could come in and say, okay, well, if I bought here at 56 and then I sold again at 105, would that be a good trade? Yeah, that's a pretty good trade. If we went short at 105 and then we close that position at 119, that's not as good, right? If we're long now at 100 and let's say 19, if we got at the close of this bar, right now it's a trade in about 119. So we're not sure how this trade is going to play out. But because this is objective, we can know exactly how well this indicator works. We compare it to other indicators. But I'm getting a little bit ahead of myself. Okay. So for now, that's generally how the MACD buy and sell signals are kind of formed. If we're bullish, that means our MACD is traveling or trading above a signal line. That means we're bullish. If we're bullish, we anticipated rise in stocks. When it crosses back down below its signal line, we anticipate a bit of a pullback, which we actually did get. And then we just recently got a long signal right here. Okay, very, very simple. Okay, that's the first way we look at MACD. How is the MACD trading in conjunction with its signal line? Okay, the next way that we kind of look at the MACD is you can use it as an overbought, oversold reading because we are looking at momentum. Okay. And the way that you can kind of look at that is like, are we in an area that's extremely overbought or oversold? Have we traveled too far too fast? Now, I like the way that we kind of address overbought and oversold in the commentary. I'm going to open up the commentary, actually. View, expert commentary. The commentary just kind of keeps track of what's going on in the chart. As soon as I apply it to the chart, you'll see there's a little red arrow. It's looking, and right now we're bullish because we're trading above our signal line. The MACD crossed above its signal line 4 days ago. We're looking at a daily chart. Since the MACD crossed, it's increased about 0.54% and has ranged from a high of this to a low of this. Okay. The other thing that we'd be looking for is overbought, oversold. Okay. Right now, today, it's not an overbought, oversold range, but it was yesterday. The reason it was yesterday, I know it was yesterday, is you'll notice we have our standard green and red charts, but when it gets overbought, oversold, we'll have a bit of an overbought, we'll have a blue bar instead of a normal green or red bar. And that's just an indication or an early warning that we might be overbought. So if I go back to yesterday, okay, the MACD is in an overbought range. Okay. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. And I think that's important. Whenever you're looking at, regardless of it's MACD or another type of an overbought, oversold, I think it's extremely important that you wait for confirmation. You know, trends, when they exist in stocks, can go for a very, very long time. There's a saying that kind of comes to mind that's like, oh, what is it? Oh, okay. The market can stay irrational for longer than you can get solvent. I'm sure you've heard that before. If not, it kind of sticks in my mind. But the thing is once you get into a severely trending stock, it can go on for quite some time. So what we want to wait is for prices to start to move lower before we start to look to take a position on an overbought, oversold indicator. And some perfect examples of that, actually right here, we got overbought, it pulled back, and then just kept going. Here, it pulled back a little bit and just kept going. Here, where it was overbought, oversold, it pulled that back a little bit and just kept going. Okay. So you want to have some sort of confirmation when you're using overbought, oversold indicators. And I didn't word this, but I like the way that they word it. Wait for a confirmation on that. Okay. If you have questions, let me know. Every time I look over here, I look for questions. All right. So that was the second way. Are we overbought, oversold? Again, MACD is great at looking at trend. It's also great at looking momentum. The third popular way, and you might have guessed it right here, is divergence. Okay. Dr. Alexander Elder, one of the favorite concepts that he likes to talk about is divergence. He calls, actually have the quote in here, I believe, in my PowerPoint. Let's look. All right. Here's the trend. Actually, that needs to move a little bit. I do have the exact quote in here. In his book, The New Trading for 11, Alexander Elder states divergence are among the most powerful signals in all of technical analysis. I thought he was always talking about MACD divergence when he was talking about that. And then I read the book. And because we have Dr. Elder come in, he'll do webinars from time to time, and he'll always talk about MACD divergences. So I figured that he talked about MACD divergences, but if you read his book, he's actually talking about indicator divergences in general. When he talks about divergences, when we do webinars with him, he's talking about MACD in specific. Okay. Now, I'm going to kind of show you how Dr. Elder talks about how to find divergences as best as I can. And then that way you can start to spot them on your chart. When Dr. Elder talks about MACD divergences, he generally looks at the histogram, this blue level here. And since we're going to talk a little bit more about that, I'm just going to make that a little bit thicker as well. Let's turn it into black. And I'm just going to make it a little fatter. I'll apply it to the chart, click OK. And then that way we can see it. I'm going to move this bullish bearish line back down. And we'll just kind of talk a little bit about what his rules are for spotting MACD divergence. Okay. I'm going to look at the peaks of the stock. Right here, we've got a peak of, the peak of MACD. We've got a peak of MACD that forms right back down here. I very specifically chose this one. You see that we kind of crossed down below zero, and then we had a higher peak of MACD. Okay, we could also do it here. Here you had a peak of MACD, cross down below zero. The cross down below zero is important to Dr. Elder. Okay, and then we come back up above and we look for the peak there. Okay, actually, I'm going to use this one. You can use you ideally want to look at kind of the most recent one. Okay, so what I'm going to do here is I'm going to grab a trend line, but I'm going to grab the trend line measuring tool. And I'm just going to do a measurement from right here to right here. This peak of the MACD to this peak of the MACD, there is an increase in percentage. This isn't important, about 172% between this MACD point and this MACD point. Okay. If I look for where the price peaked in those same areas, I'm just going to draw it right here, just drop down here. Here was kind of the high, it was a couple bars later. I'm going to compare it to the high that we just had. And this was about 21% increase in price from this peak to this peak. Okay. So objectively, we can look at this and say these are both increases. They're both going up. Okay. And that's not a divergence. What we're looking for is when we're looking for a bearish divergence, for example, is we might be looking for something that's a little bit more that, like this. Okay. We're looking for the MACD to set we're looking for the price. I'm being careful about the way I word this, just so I word it properly. We're looking for a price to set a new high that is not supported by MACD. Okay, so if we had something that was looking more like this, what we would say is like there's a divergence between those two indicators. We're getting a new high in price, but MACD does not support that high in price. That's not what is happening on this chart. But if that was what was happening, Dr. Elder would have some very strong words about that signal. He would call it the most powerful signal in all of technical analysis. He would also call it the breaking of the backs of the bulls. Okay, a very, very bearish signal. At that point, we'd be looking, okay, we're running out of momentum. It would be one of his MACD divergence is one of the things that he wrote as one of the scans in Metastock as in part of his Elder disk, but it's one of the most powerful signals he looks for. So in that particular case, we don't have one on Roblox. We're definitely getting a new high in price. It's definitely getting supported by a new high in MACD. They're converging. So, okay, there you go. Those are the three different ways. If we do see, and we don't in this commentary, the third thing that we do see here, even if I just look at the price there, is not a divergent signal. And if there's one in the last 5 bars, it'll let you know. Okay, so I love the commentary because it helps you understand the rules, right? Right here it says it's bullish because it's trading above its signal line. It's been trading above its signal line for 3 days. It's in an overbought range because, again, we're looking at yesterday. Wait for prices to move lower before considering any positions. If you get overbought, you might consider a more protective strategy to lock in some of those gains. Usually, if you're in a long position and things are moving pretty fast, you might want to kind of move up a stop or get a little bit more protective at that point. And then divergence. Okay. That's it. They're very, very simple. Very straightforward. Those are the 3 ways you use MACD. I'm checking the time. Now, the things that I really love about MACD and technical analysis in general is generally when we're looking at the study of a price, we're looking at it from an objective perspective. We're not looking at, like what happened with like what the tariff situation is doing or what the quantitative easing is doing. Oh, that goes way back, right? Or what the stimulus after maybe a major pandemic is happening, or what a real estate market crash might do. What we're studying is the price. We're studying at what price is doing. In the case of MACD, we're looking to kind of take advantage. What is the overall trend? How do I take advantage of that overall trend? And from a perspective of that, we keep objective. Because we're objective and we understand why we're trading, we're allowed to make more rational decisions. We know what our exit criteria are going to be before we get in. We're just looking for the MACD to cross underneath. That'll get us out. Or you might want to do a protective stop. But the idea behind having a technical system to help us trade is to have a business plan so that we can understand when we go to buy a stock or to sell a stock, How many wins is it going to get us? We could absolutely go through and say, okay, if we bought here and sold here, how is that? It was okay. If we sold here and bought here, that was not so good. If we bought here and we're holding, it's good so far, but not so great. But because this is objective, we can exactly understand. We could go through this whole chart and say, okay, if I bought every time Roblox gave me a signal, buy or sell, if I took every trade, how many winners am I going to have? How many losers am I going to have? What's my profit going to look like? What's my drawdown going to look like? What's all that kind of numbers? And I can kind of understand how that would work. And I could actually go back several years. I could go back decades. I could kind of see exactly how that all fell together, right? Or since all of this is objective, you know what's really good at doing stuff like that for you? Computers. They're really good at looking at objective decisions and trying to decide, okay, well, how well did MACD work? How did it compare to maybe maybe I'm using stochastics, or maybe I'm using a little bit of a different methodology. What's the best methodology for me to use when I'm trading that stock? And that's how technical analysis can help. We've developed a tool that can kind of help us understand that. So let's go ahead and kind of play with that a little bit. I'm going to go ahead and open up what we call the Power Console in Metastock. I'm going to go to the System Tester, and we'll put this to the test. We'll test it against some other ideas or some other methodologies that are kind of put in here. Okay, what I want to do, let's go ahead and put in RBLX. I want you to understand, though, you can use kind of whatever symbols you want. So I'm going to kind of pick out a few of them here. Let's do Meta. We are the original Meta stock, by the way. But let's see. We'll do GE. We'll also do GEV.O. And I think that's okay. My point is you can trade whatever instruments that you're interested in. My litter file says, can I run a scan for MACD divergence? You can. Well, it actually wants me to run a scan for divergence, but you can do that. You can absolutely run an exploration. You can find it. It gets me a little bit off topic, but you can absolutely do that with the software. It also would kind of get me, I had to try and focus when we're talking. Okay. So let's kind of go in and test things here. ACT. Actually, I think also while we're talking about system testing in particular, or not scanning in particular, I think we have one of the best scanners. I am totally biased, no question about it. But um, yeah, I think we have, you can test, you can go in here and scan whatever markets you're interested in, for whatever ideas that you want. We have such a great data set from our provider, London Stock Exchange Group. You can use this in America, London. We get a lot of customers from India. Wherever you want, you can kind of use this on the markets you're interested in. If you're interested in Forex, we cover those. If you're interested in currencies, if you're interested in futures, whatever it is that might be your interest, you can do everything on it. I'm using a few stocks here, but there you go. Okay. I'm going to grab the Ichimoku. Ichimoku is actually a system we just added to Metastock that doesn't really, I do a whole class on it that talks about here's how Ichimoku works. Here's how you understand it. It's really cool. There's a couple that I want to make sure I include here. And I'm just choosing the ones. We'll do the Bollinger Band system. I'm just choosing the ones that I know are built into the software because if you want to, you can go create your own. And I'm actually staying away from the ones that are optimized because it kind of saves me just really talking about how optimization works, which you can certainly do in Metastock. Let's do the LCI ones. These are all no optimization though. Okay. And then we'll do the MACD one because I talked a lot about MACD. We might as well include it, right? So let's go ahead and start this. What I'm going to do, just to kind of talk about what I'm having the software do, is I'm going to take all these methodologies. I've selected about, how many are selected? 100. There's a couple hundred, so if I could keep going through it. But the idea is to kind of get you the idea. I'm going to take those methodologies, about 100 of them, and I'm going to test them. Okay, I'm going to say how well, if I took these methodologies, MACD being included in there, how well would it have worked? Okay. With the data we get from LSEG, the London Stock Exchange Group, you can go back to the 1980s here in the US on a daily basis. Internationally, you can go usually about 5 to 10 years. It depends on where you're at. But they have a great breadth of data. thousands and thousands of stocks. Okay. In terms of, for the purpose of just showing this to you, I'm going to take all the long trades out of these systems and all the short trades out of the system. So we'll do both and go back about 500 bars. So if I go back 500 bars, that's going to be about 2 years. There's about 252 trading days, give or take, in a trading year. 500 will go back about 2 years. Okay. I get a question a lot. Can you do walk forward system testing? You could, if basically in a nutshell, that's testing from a certain time to a time in the past and getting a back test result, and then seeing how those best performing systems would work in a current environment. Okay. And if you want to do that, you can just set your exchange time to 6 months ago or whatever it is that you want to do. You can certainly do it though. We're going to do this on a daily. You can do hourly or 240 minutes or whatever you're trading. You can go down to weekly and monthly if you want to. We're going to use daily. Okay. For trade options, I'm going to go ahead and start with an initial account of $10,000. I'm going to trade it as I could do number of units, a transaction cost, but I'm going to go with a percentage of available equity. And just for the point of the test, do about 75%. For trade execution, I'm going to leave that selected as realistic market prices. What that'll do is wait till the bar is closed and buy on the next bar's open. So in the case of a daily bar, it would buy on the open of tomorrow. I actually trade a little bit differently than that. I make all my decisions usually within the last half hour of the day. So if you want to trade like that, you could just say, okay, uncheck this and say, I want to buy on the current day, but I want to buy on the close. You want to make it realistic for me, for you. Okay. But I'm going to go ahead and click on realistic market prices. That's the default option. You can't program in slippage. You can account for commissions if you pay them, all that kind of stuff. And let's go ahead and run this. Okay. And to reiterate what it's doing, after I start it, just to kind of give me a little, it's going to go grab the data for all of those stocks. And it's going to go through and test them. It's grabbing about 2 years of historical data. We did about 4 tests. We did about 100 different stocks. You can see it's kind of chunking through it. It's going back and telling us, okay, this methodology would have worked on, this is how well it would have worked, this is how well it wouldn't have worked, et cetera, et cetera, et cetera. What we want to understand is exactly what methodology would have worked best on what stocks and what type of a scenario. So I'm going to go ahead and let it kind of chunk through this data, kind of play with it. I'm going to sip my coffee while it does, and we'll just kind of let it complete. I should have a little bit of a story prepped in. We've gone through about 7,000 tests, which seems like too many. I think I got see, I do have an optimized system in there, and so it's testing a lot of values. Otherwise, we'd be done by now. But you can come in here if you're creating systems. You can come in here and say, well, okay, with MACD, what if I used a 10 period or a 15 or a 20? Is there a better? And that's how optimization works. It is done now. Let me go ahead and click on the view report option and do a little bit of a look at the time right now, just to see how we're doing. Right here, these green bars are on those 4 stocks. Those are stocks that would have performed well, or systems that would have performed well on average against those 4 stocks. And the red ones are ones that didn't work. Okay. The idea here is I want to kind of, if I'm going to kind of spend some time learning about methodologies and indicators and how they work, I would personally prefer to focus on the ones that work for the stocks that I'm interested in. And in that particular case, I'd want to know the ones that work really, really well. Okay. If we have more time, I could kind of go in and test these against a whole S&P 500 or the optionable stocks or whatever. But you can really do a huge amount of testing in the system tester to get a good idea of not only what works, but what works over time, what was worked over the bullish markets and the bearish markets and the sideways market. You can go back as far as you want. Okay. I've already sorted this on average net profit, and let's kind of take a look at these. So for average, obviously that just means average. Out of the 4 or 5 stocks that we put in here, our top performing system was called the PS derivative moving average, would have made about 129% average gain. The best profit being 16,000, the worst profit being 0. Didn't trade a lot. Average trades were about 1. Average win versus average loss was 1.3 to 0 because it didn't have any losses. I like to make sure there are losses in my system tester because I want to understand not only what the losses look like, how big they are, right? Because in the words of Robert Deal, he'd always say, you can win 9 trades out of 10 and still go bankrupt. How bad is that 10th trade going to be for me? Okay. And so the answer for that is like if I wanted to kind of see what our losses look like, I'd just test more data. We've got an obviously very selective system, which isn't necessarily a bad thing when you can scan everything that you want. But I want to understand how this would work on more data. I could include more stocks in my test, et cetera, et cetera. There's a lot of ways to cover that. Okay. On average, this traded 0 times, so it's even worse. Here we had about 4 with a 50-50 batting on the rune reversal. You had a percentage crossover, which had about 44 trades. That's about 22 a year per stock. That's average. So we can kind of get an idea of how often these trade and where we're going to get buy and sells. Interestingly enough, we had about this Arun reversal, we had about 6 winning trades. It was about 50-50, but our win-loss ratio kind of made it a very, very profitable system. Over 2 years, it would have been about 81%. It's about 40% annualized. That's pretty good. So I can kind of look at that as well. There's a lot of things I can look at this on this screen and kind of get an idea for what works well. Okay. Let's say I'm just going to go to our bull power, bear power system. It had about 45 trades in 2 years. That's about 20. Oh, it should be easier to do math. It's not even early. 27 and a half a year. Okay, so let's take a look at that, and I can kind of click on view. I can see how it worked on Roblox. Obviously, it did really well with Roblox. Roblox has been a very robust mover this year. Meta worked pretty well on. GE, it worked pretty good on. I got the RAG symbol for GEV, so there wasn't a result for that. Okay. Let's take a look at Roblox. I can go in a little bit. So if I had 500 stocks in this test, I could see exactly how well these trades were distributed on like the S&P 500. Okay. Let me go ahead and click on view. It's going to give us a lot of details that we're not going to dive deep in, mostly because of time. Okay. But there are a lot of numbers on here that are reported. For example, our annualized performance is about 86%. Our profit performance on Roblox, if we just would have bought it 2 years, actually outperformed it, was 172%. Okay. Our total trades, we made about 50 trades. Of those, profitable 25, unprofitable 25. So it's about half and half. The difference, though, here, and we can know that going in, okay, I'm going to win every other time. But the difference is like our average profit, if I look here, was about 961. Our average loss was about 269. So when we're winning a lot more on average than what we're losing. Okay, and that's why it's an efficient system. If we wanted, we did have an excursion of about $1,200, which is about what our average profit is. So if we kind of like what this looks like, but wanted to trim it a little bit, we could add a stop. It's actually very, very easy to do with Metastock and say, hey, just give me a trailing stop. And here's what I want the parameters to be, and you could retest it. But I'll kind of go through that today. Again, just because of time, I just want to tell you that it's there. All of these are things we can know what happened versus buy and hold, what our profit loss index looked like, what our risk reward index looked like. And if you're not sure about whatever any of these mean, you can just click on help and it's going to pop up and tell you exactly what all of these numbers are. Okay. If the other thing I like to look at, you can look at our orders, our positions. I want to look at the equity system. This is going to give us an idea over that 2-year period how our equity performed. Okay. If I decide I like this, if this being the key system, I wouldn't recommend you ever use testing as a way to skip your education. Go ahead and plot this on the chart. What I would recommend that you do instead is use it to shortcut your education. I think a key part of trading, as I said earlier, is discipline. So, and I think if you understand why, what are we looking at here? The bull power, bear power system, is that what we're looking at? I forgot. If we understand why we're making a buy and sell decision on that, it's going to help us kind of understand kind of maybe the hazards of that methodology. It's going to help us stay disciplined. If we understand that we're going to have 50% of our trades as being losers, but they're not going to be as big as our winners, it's going to help us have discipline. And if I still like all those numbers and metrics that I read, then I want to understand what the rules are. And just like we did with MACD, I'm going to add the Bull Power, Bear Power Equity Expert Advisor. So it's called PS Bull Power. And there's a few versions of this. We're going to do number one and attach it to the chart. And very quickly, just because of time, we'll go back into that expert advisor. We'll go to commentary. And if we get buy signals like we did here, it's going to tell us why we got a buy signal. It's going to tell us what to do with that buy signal. Here, it just got out of the trade. We'd still be long. The reason it got out of this trade is because it closes it on the last day, just to kind of get that last one. Here's what it says. Oh, wow. I didn't. The concept of bull power and bear power was developed by, I mentioned this guy already. Not rehearsed. Alexander Elder. Bull power is calculated by subtracting the 13 exponential moving average from the high. This is typically displayed as a histogram. Kind of tells you what that indicator is, how it's calculated. Not going to read it all. Running out of time. The system forces each indicator to use the same scaling method as the other. As the bull power is stronger than the zero above the zero. As long as the bull power is stronger than the zero line, then the bull power strength is below the zero line. But then you stay in a long position. If bear power strength below the zero line is greater than the bull power strength above the zero line, then a short position is maintained. Pardon me. It's telling us exactly what this is. We could go into more detail. We could go in and kind of do, if we're still not clear, we could Google bull power. We could look at one of his books. I point this direction. I have a bunch of books over here, but we kind of get an understanding of what that is. And of course, I alluded to this earlier. If you find something that you like, if you want to run a scan for MACD divergence, you absolutely can. I'm going to highlight that tool real quick, and then I'm going to wrap up and let the next expert speak. So right here, we're going to come back into the Power Console. I'm going to come to our scanning. We did talk about bull power, bear power, so let's go ahead and kind of just set that one up. Again, one of the things I love is I can just search for these things. They've made Metastock so much easier to use over the last several years. I'm going to do this signal scan, bull power, bear power 1. I'm going to go ahead and I've got it set to go against these stocks that I've identified as already being bullish based on tracks. We won't go into that right now. No time. But if we come down here a little bit, I've also got the Dow Industrial, the NASDAQ 100, and the S&P 500. Go ahead and start that as a scan. I'm going to show you that it's running, but we probably won't let it sit through the whole thing. But I love scanning in Metastock. And the reason I like scanning is I use it every day. As somebody that's looked at charts for, what is it, 20? Yeah, I'm looking at the calendar, 28 years this year. One of the things I still go back to is scanning because there's just so many things out there. As an options trader, there's like 5,800 optional stocks these days. What I want to be able to do is get rid of all the stocks that don't have an opportunity and focus on those ones that do have an opportunity. And I think that's one of the things that Metastock does very, very well. I'd even venture to say best. So this will go through it. It's going to kind of chunk through the data. It's going to tell us any of the buy signal, bear signals. It's going to go ahead and finish. So am I. Just like that segue. As I had kind of mentioned earlier, Metastock has been rated the best software program in its category. It's been rated that 32 years in a row this year. For all of those people here in the audience that are using Metastock and that have been for a number of years, thank you. I appreciate that. If you've been voting in the Reader's Choice contest every year, thank you. It helps. Helps a great deal. One of the things that I kind of mentioned earlier was like our employee retention. It's a great place to work. There's a lot of us. I think the average is like something like 15 years. I've been here almost 30 years. So it is a really, really good place to work. But one thing that surprises me is some of those people that I set up with Metastock back in the 90s are still using it. They're still kind of talking to me about the way that they trade. And I really think one of the best things about Metastock is how long it's been in development. We talked about a couple systems today. There's hundreds in there, the ability to test them. I really feel that Metastock is a tool that as you get better at trading, as you get more consistent about trading, as you go and find methods that work, it's going to work better for you. It's not going to be a program or a product that you grow out of. And I think that is why our customer retention is so high. And I think that is why we've been rated #1 32 years in a row. So I'm going to talk a little bit about how you can get it. We have two different versions. We have Metastock Real Time. RT stands for real time. It's full. You can go full real time with it. It allows you to do everything that we talked about today with, but you can also use a lot of intraday charts. You can use hourly, 60, 30 minutes. It also comes with a product that was developed by London Stock Exchange Group that is powered by Reuters News. And it's one of the best products. We call it Zenith. It was built as a competitor to Bloomberg. And it's, if you're an institution, if you're a hedge fund, if getting it, it's going to be a lot more than what we do. Our pricing starts at $210 a month for this and includes an institutional quality news service as well as everything I showed you today for only $210 per month. We also have well, it's not end of day. Earlier this year, we released an update. Every customer of ours now gets streaming data. With DC, you get daily, weekly, monthly, yearly charts. It streams in on a 15 to 20-minute delay, depending on the exchange that you're following. And that means you can test in the data during the day. You can run your scans anytime you want to. You can go in and look at how your charts are doing and see if you need to make any changes to your position. And the only difference is you don't get that news platform. You don't get all the broad market stuff. You don't get all that kind of stuff. You get everything I showed you today, though. And you get streaming data and you can run scans during the day. And it's only $75 per month. So we do have a bit of a special offer. There are a lot of bonuses that are included just when you install Metastock, but I figured I'd highlight a couple of them. One of the things that we just included with our newest version of Metastock, Metastock 19, is a product called Ichimoku Master. Ichimoku is something I could spend a different hour on, not today, but this is an expert advisor, a scanning. It's all built around Goichi Hasada's Ichimoku method. Very, very popular. A lot of people, there's some courses that you can buy that are several $1,000s. But if you're interested in Ichimoku, this is a really good add-on that can help you identify buy and sell opportunities, determine bullishness and bearishness on a chart, show support and resistance now, and with the use of the cloud into the future, identify potential reversals, stop losses. Goichi Hasada developed the Ichimoku Inko-Hui indicator. It's almost like he released them in the 1960s and he started developing it back into the 1930s. This is a method that stood the test of time, and as a bonus, it was a $399 add-on. It's just included for free, and it's one of my favorites because it's very good at teaching you what to do. We also include a gap identification system. Again, this is one of our bonuses that we include with 19 for free. It just helps you scan for gaps. If you want to be able to find gaps, see if they're verified by volume and understand them. A lot of people shy away from gaps, but a gap, no matter what, is a significant statement of investor sentiment. It could be a reversal. It could be an exhaustion gap. There's a lot of different ways you can read gaps. This will help you identify them. Okay. We did also include a Michael Murmer system called the Expert Trading System 2. Michael Murmer was awesome. And this is just included. It's a trend following system that's just a bonus. It's not used to be $300. Jake Bernstein, I mentioned him, psychiatrist, prolific writer, just did an interview with him. We include his JBXE, his newest indicator. He developed this with Brian Latta, the JBXE. Okay, I need to hurry. We want you to understand how to use Metastock. I'm going to include the Unleash the Power of Metastock training. That's normally a $99. I never charge for it. I understand that if Metastock's helpful for you, if it helps you make better trades, it's going to help you make better trades. You're going to keep it. And so this is just a training course that we include. There is also a white glove installation that you can set up. It's a one-on-one where they'll help you to walk through the scanning, the testing, install Metastock, et cetera, et cetera, et cetera. I'm talking faster because I need to. You'll get unlimited access to our support team. They'll answer any questions you have. They're available by email, by phone, by chat. And we actually keep more people in our support desk. So we keep in sales and marketing put together. And they do an awesome job. So what we're going to do here is you can do the DC version, you can do the real-time version. If you buy a month, we're going to give you the second and third month for free. Okay. That means if you sign up today, you'll be running Metastock until October 22nd. That's hard to think about, right? We're going to be fall. We're going to be almost at Thanksgiving. Yeah, closer to Halloween though, right? By the end of that, you'll understand if Metastock's helpful. If you decide you want to keep it, you'll be able to keep it. And your risk is really the entry option. So you're going to get all those. You're going to get that delayed global market data. You're going to get that white glove installation. You're going to get the Ichimoku method, the Jake Bernstein, the Michael Murmer stuff. All of that stuff that I kind of briefly mentioned is included. Is $75. That's $25 a month. That's it. To try the software that's been rated #1 32 years in a row. And if you don't like it, you can cancel. $75. 800-882-3040 if you want to call, if you have questions, et cetera, et cetera. You can also chat with our sales team at metastock.com/sales chat. And you can also go to just sign up online, metastock.com/LP3 for 1. So there you go. David, thanks for having me. I did take